Welcome to Coin Engineer, everyone. As you know, we've been focusing on futures trading for a while. You've also asked us some questions under these videos. In this video, we'll address one of those questions. Should we trade in the short term, medium term, or long term? We'll try to find an answer to this question together. What kind of strategies can we use? When is it more logical to open short-term trades? When does it make more sense to make medium-term trades? I'll be addressing these topics. Now let's try to answer your question right away, friends. I will talk about both my own experiences and some technical parameters. We can proceed accordingly. Should we trade in the short term, medium term, or long term? First of all, let me say this, friends. There isn't just one strategy for trading with futures. In fact, there are dozens of different ways to win. What matters here is to determine a method that suits your own budget and psychology and to stick to it. If you ask me, I am in favor of short-term and medium-term trading. I also know people who open trades over long periods, let's say 7 or 8 months, and make good profits. If you're making money with long-term longs, then yes, that's great. There's nothing wrong with that. But if we don't have a lot of money, carrying futures positions for 6 or 7 months can be quite risky, friends. Now you might say, let's say we went long at 20,000. What's wrong with that? Yes, if you make a profit, there's no problem. If you're carrying your long or short position with a profit from the moment you open it, that's perfectly fine. Or if you turn a profit within 3 or 5 days, that's also perfectly fine. But don't forget, you can also end up on the wrong side. And I know, friends, I know people who have held negative positions for 5 or 6 months. For example, let me switch to Ethereum now, friends. As you know, Ethereum has lagged quite a bit behind Bitcoin, friends, and nobody expected this. Especially here, there was a general belief in the market that it would rise even more with the approval of the ETFs. But that didn't happen. As you know, Ethereum entered a downtrend. If someone went long from here and didn't have enough money and didn't lower their entry price by adding to their position, they ended up paying funding fees for months. Friends, if you're wondering what a funding fee is, it's basically a commission that long traders pay to short traders and short traders pay to long traders every 8 hours. Let's say there are too many long positions in the market and you also go long at that time, then you have to pay the funding fee. But if you go short while everyone else is going long, then you receive the funding fee. That's the simplest explanation. So, right now, are there more long positions or more short positions in the market? How can we figure this out? For this, you can look at this section here, friends. It says funding. As you can see, there is a positive funding rate. So right now, there are more people in long positions. In the medium or short term, funding fees are not a big issue, friends. But in the long term, especially if you bought at the top, let's say, this asset keeps dropping. As its price falls, the number of people going long will probably increase, so the funding fee you pay will also go up. Now, you might ask, let's say you opened a long position at the top and didn't set a stop loss. I'm considering the worst case scenario here. And on top of that, you don't have any money left to add or use as margin. When you hold a position for 5 or 6 months and remain in the negative, the funding fees can really become a serious burden on your back, friends. You might find yourself paying $5 or $6 a day, just in funding fees. Because by nature, as the market drops, people tend to go long. And this tendency to go long increases the funding fees even more. Of course, in such situations, you need to know when to accept the loss and exit. If you think any cryptocurrency will rise significantly in the long term, make your investment in spot so you don't have to deal with funding fees. Now, let's move on to the medium term. Friends, I take medium term and short term trades. I hold a position for a maximum of 3 months, friends. That is, if it's in profit. I try to get out of a losing position as quickly as possible. Or I try to get back into profit by adding to the position. It depends on my strategy for that particular trade. For example, I have an Ethereum position that I opened a few weeks ago. As you can see, I'm up 30%, friends. This is actually a medium-term trade for me. As you can see, I kept my leverage quite low. I'm thinking of holding this for at most another month or 2. If things start to go south for Ethereum, I'll just take my profit and get out. In the worst case scenario, I'll accept my loss and exit. But as you can see, I didn't use a stop loss here. Yes, I entered a number, a price, in the TP section, that is, the take profit section. But I didn't enter a price in the stop loss section. Why is that, guys? Let's talk about this a bit. The reason is that I have a budget that allows me to add margin to this trade. I've opened a $900 position, but if I add another $1,000 or $2,000 as margin whenever I want, I can lower my liquidation level. Especially with cryptocurrencies that have a large market cap like Bitcoin and Ethereum, if you have a lot of margin, you might not set a stop loss. So, let's say you have $1,000 and you open a $100 position. If you're also using low leverage, like I am right now, you might not use a stop loss. So where is the maximum point that Ethereum can go? For example, what's the lowest Bitcoin could drop to, guys? At most, it would drop to $20,000, right? On the other hand, Ethereum would drop to $1,000 at most. If I have a budget that can withstand those liquidation levels, I don't need a stop loss. But with cryptocurrencies that have a small market cap, you absolutely must set a stop loss. So, even when trading mid-term with cryptocurrencies that aren't in the top 3 or 4, make sure to use a stop loss, friends. Of course, with these kinds of futures trades that we hold for a few weeks, we also incur funding fee expenses, friends. You need to calculate your profit and loss accordingly. So, if you're taking such a position, at least make sure you're earning a decent amount. Don't just grab $10 and run. If you're not making more than 10% profit, there's really no point in paying funding fees for that long. It's illogical. It's better to buy from spot. In a scenario where you haven't set a stop, like I'm doing right now, if you've opened a position in isolated mode, you'll need to manually add margin. But if you open a cross position, it will automatically move you away from the liquidation level anyway. This also depends a bit on your own style. So how should we approach short-term trades? By short term, I mean trying to catch various opportunities by analyzing 5 or 15-minute charts. Friends, it's definitely much riskier compared to a medium-term approach. We need to accept this. In fact, it's best not to get involved with anything other than Bitcoin or Ethereum on 5 or 10-minute charts. When the market cap is small, even a sale of a few million can create incredible volatility. So, friends, the chart can get completely shaken up. That's why if we're looking at 5 or 10-minute charts, we'll stick to Bitcoin or Ethereum. And even when opening a position in Bitcoin or Ethereum, we shouldn't trust the chart 100%, friends. For example, let's open the 15-minute chart. Let's zoom in a little bit. Like this. As you can see, we can say there's a buyer in this area, and in this area there's a seller. However, placing a direct long order here or a short order at this upper area may not be very logical, friends. If you're looking at the overall picture on the 15-minute chart, you also need to drop down to the 5-minute chart. Why are we going to do this? Because, in my opinion, when we look at short-term charts, like 5 or 10-minute charts, the lines don't really serve much purpose. A candle comes out and throws a needle, like here. It can stop you out and then move on. That's why the things we should try to catch are reversal candles. I don't know if you've heard of engulfing candles, but let's assume this area here is a buyer's zone. In that case, we'll try to catch a reversal candle, an engulfing candle. What does that mean? As you can see, there's a green candle here. This green candle needs to be stronger than the body of the previous red candle. From here, if there's also support at this point, it's actually a small sign that the price might reverse. But in my opinion, on 5 or 15-minute charts, it's much more useful to analyze the candles rather than just looking at the lines. For example, if a long position had been opened after the close of this candle and the stop was set here, the price would have dropped down to this point and then moved up. We could have taken profit from here as well. Another thing to pay attention to is that since we're looking at the chart up close, the price movements here are actually very small, guys. For example, the price is here right now. Let's say I opened a short position. The maximum percentage I could catch is, as you can see, 0.2%. If I opened a trade with 10 times leverage, I would make a 2% profit. So, compared to the positions we hold in the medium term, we can increase the leverage a bit more here, because we're trying to take advantage of small price movements. But, unlike in the medium term, here we can never loosen our stop loss. We need to use a stop loss in every trade, because it only takes a few candles for our plan to fall apart. In these short-term trades, we don't have an issue like funding, friends. Since our goal is to close the trade within 5 or 10 minutes at most, we won't be paying any funding fees anyway. We'll only pay a small commission when opening and closing the position, and as the leverage increases, your commission rate also goes up a bit. But if you still haven't registered on Binance, you'll get a small discount on commissions if you use the link in the description, friends. I hope this video has been helpful to you. We're trying to explain the futures trading panel to you from A to Z. If you still have any questions on your mind, please don't hesitate to write them in the comments. As the team, we'll try to answer them in future videos. Take good care of yourselves. Wishing you lots of profits.